The Dow started off strong today, or positive. Then it spent a good period of just trading absolutely flat. All the indexes were trading absolutely flat. Then it started to sell off in the afternoon. So they created a signal that tells us they're selling, but is this a reversal signal or is this just profit-taking pullback? Part of the analysis from Candlestick analysis is that it gives you other indicators to evaluate to tell you whether this might be a full-scale reversal or just profit-taking. Number one, we can see the stochastics aren't quite in the overbought condition yet. That would be a clue that maybe we're not at the top of the trend. Number two, we've had a strong trend so far. There might be some profit taken, and where would that profit taking likely come back to? The T line. So there's two options up here. If you've got stocks in individual positions, if they're showing sell signals or weakness based upon the market conditions, go ahead and close them out. The worst case scenario would be that you'd have to buy them back if you saw a J-hook pattern setting up. The other situation is if those strong charts are working, even in a pullback, they shouldn't create anything that would look like a sell signal. And the advantage of working with candlestick patterns is that they have an inherent force that work in themselves versus what the market is doing. Our recommendation on SPRD has been produced because of the fry pan bottom pattern. It has produced a good profit, and right up until today, we had a breakout situation. We were making good money with this expectation. One, that it was either going to fail when it got up here or it was going to break out. As we saw in this case, it broke out very nicely. But the major advantage of candlestick signals is using these indicators as to coincide with your decision making as far as what to do on the next trade. For example, notice how soybeans started with a left-right combination that closed right here in the T line. Started a nice strong uptrend. However, yesterday we had a doji type day, a good distance away from the T line, and stochastics in the overbought condition. That gave us the impetus to take profits with the idea that if it opened positive in an overbought condition, you could always buy it back immediately. On the other hand, if it opened up weaker, that gave you the alert to go ahead and short immediately. Even though this may not be a full-scale reversal, where was the likely target going to be? Probably back to the T line. So the big downdraft in soybeans today was taken advantage of by getting into it immediately on the short side and being able to close it out on the close, making a few $1,000s off of that trade. That'll be it. We'll see you in the chat rooms.